Hello traders, and welcome to another Wednesday's educational video. Hopefully everybody has been having a great week so far. In this video we will discuss essentially what makes us unique and what we do different from 90% of market analysis services or traders out there, with the emphasis being on how we are increasing the ROI and profit factor in trading. And we are going to see many of the components we are using in terms of analyzing the market and providing mentorship and recommendations to our members. So here we go. Firstly, we will see the key factors that we use to forecast the market, which we are using multiple ones. So the biggest mistake most of traders do, they just look at one instrument or two instruments and they make let's say decisions, which is the wrong way of executing things. So first of all, we are using and determining the market cycle and dynamic. Sometimes it's a basic one, sometimes it's fixed, and sometimes it's complex. So this requires experience and skills to be able to identify. So that's why we have the service and we are unique. We identify, of course, key market levels using real market order flow data. And obviously we are using a rotation period of the market. For most of you, I'm sure this sounds not familiar because as you know, 90% of traders overall, they are unsuccessful, and this is for a reason, is because they don't really see the market the way we do and we get into the details, right? Now, another thing we are doing is using a market distribution factor. What this means is, for instance, in certain cases, the exchange of certain market orders shifting from one place to another. What this is telling us to the other related pairs or instruments, for example. So this is a detailed analysis that can provide us in many cases with the timing of certain entries. Of course, we are using also the market correlations. This is not what is available online for free. Market correlation can be anything between basic, first or second degree, right? And it can also be complex and different. So that's why in many cases the market confuses most of the traders out there because they don't really understand how these correlations can become complex, and they have also second degree correlations. They can become choppy in some cases. You need to understand how these things work. We calculate, of course, the timing based on the rotation period of the market, order flow changes of the market, which is very, very important to know that because, of course, you need to be able to follow where the bigger, let's say, transactions of the market are located and which should be the next possible big reaction of the market. So you don't want to be on the opposite direction of that because otherwise you know what's going to happen in your trading accounts, right? We identify lagging markets, which means that we are seeking, of course, to find which instruments can provide us more value in terms of our entries and the expected anticipated magnitude of the move. So how much do we expect the market to move and give us as many, let's say, pips or percentages as possible? We need to be able to identify in certain cases which markets are the leading markets and which are the lagging markets. And usually the lagging markets are the ones that will eventually catch up to the leading ones. And those are in many cases the ones that can provide to traders much more value at the end of the day. So it's all about being smart with what you choose to trade, right? And obviously we provide trade recommendations based on efficient risk to reward ratio, which typically is more than 1 to 3. We tend to avoid anything smaller. We look for more than 1 to 3, depending of course on the market conditions at the time of the year. But in majority of cases we prefer to do that because it provides us with a more efficient value and risk to reward and everything else. So we do ROI calculations and expected positive percentage, which is positive EV, expected value. This is something that most traders out there, they do not consider, and this has a negative impact into their long-term trading results, because you need to understand how to calculate these things and being able to generate good trading ideas that they will provide to you with higher positive expected value, right? So we're gonna see next what we are trying to say here. So what we are doing essentially, and in our live sessions for the premium members, we set up a plan of the market, right? So we are looking to plan ahead of time. So what we do, we have the expertise in planning ahead of time, as you can see here, and we lay out the market path, right? Now, we understand the market in depth, which allows us to do this type of planning. So not everybody can do these things, right? You need a lot of experience and knowledge to do that. And of course, we will always consider possible alternatives, because the market is never 100%, is never perfect, and we do have alternatives. So we're always going to plan ahead of time, of course. We will have in mind what is the alternative scenarios, and then we are waiting for certain hints and evidence confirmations from the market as a whole in order to allocate which is the highest probability move and why. We always justify any type of analysis or forecast we are doing. We always have an answer and we justify our analysis. We never provide anything out of opinions or out of randomness. Everything is based on something, of course. And we look at the overall market and not one or two instruments. This is what the biggest mistake of most traders they are doing. They only look at one or two markets or instruments to determine their analysis and trading setups, and this is why, as you know, 90% of traders, they do not last more than 6 to 12 months time. And this is why, because they do not understand the market as a whole and they do not connect the dots. So what we do, we gather the data, we look at everything, and we are looking to, essentially in a metaphorical way, we look to solve a puzzle. So when we have enough data and evidence of the market, then we have a clear picture, and this is what we present to our members in our analysis, and based on that we are able to provide a couple of trade recommendations to our members, which they can execute if they wish to do so, right? And of course, the ability to generate great trading ideas. At the end of the day, guys, this is how it works. It's a highly competitive market, as you know. It's a highly, let's say, from the retail trading perspective, we have about 90% of traders failing at the end of the calendar year. So you can understand that it's not as simple as some people may have tell you, or they do whatever they provide services or videos. So you need really to understand the market as a whole and how certain things work, and you need to connect the dots. Only then, when you really understand it, okay, then you will be able to generate great trading ideas. So this is what we provide here at ROI Forecast, and this is what gives us the edge of the market. And of course, this is what makes us unique from anybody else out there in the market, and this is why we have launched. So our aim is to support traders around the world, and we are looking to solve this problem that 90% of traders lose money. Of course, we cannot help everybody out there, only the ones that will consider joining us with the link in the description, which we provide the membership. These people that really want to improve their trading, of course, they are welcome, and we are happy to help them out. Yeah. Of course, one thing that we do, which is very different, we are transparent and honest with our members. because we will let the members know if we are seeing bad market conditions beforehand, right? So we are able to foresee bad market conditions in most cases. Of course, again, there will be room for error. We will be wrong at certain times. Nobody's perfect, right? But most of the times we can see those conditions. We have, of course, a reduction of trade recommendations and reduction of risk slash exposure during those times. We need to allow the market to clear out, provide us with enough evidence and data for the next move. And we are mentoring our members through the live sessions in our premium plan. On how to stay patient during those type of conditions, and when to avoid trading at certain periods. So at the end of the day, you are not obliged to trade every day. You are not obliged to trade every week. You need to understand certain times of the year or periods of the year that we have bad market conditions, which means in those cases, if we're gonna do any trades, we need to be aware, reduce our risk, perhaps having a tighter stop losses and such things like that, that will save you money in the long term. And when the market is clear, when we have good market conditions, it's when you as a trader need to understand it, and this is where you can get a little bit more aggressive. So at the end of the day, you need to have a little bit of a sense of the market. Yeah, that's what is going to make you better than the rest. If you cannot foresee at least the near future, if you cannot understand certain market conditions and when to get more aggressive and when to stay patient, you will not be able to stand out from the crowd. So this is what ROI Forecast aims to do here. We want to show that we can do that and we can support our members in a big way. And this is why we have launched this service, right? So as you can see, we also have already a Trustpilot page at the description of the video. You can check it out. Some of our members have already provided some sort of a feedback, and this feedback is going to grow over time more and more with more members leaving their feedback and joining, of course. And at the end, I would like to highlight here that we aim to have an efficient profit factor. For those who don't know what profit factor in trading is, I suggest that you Google it or search it out. You need to understand what this means if you are looking to become a highly profitable and efficient trader in the long run. So what we are trying to do with this one, of course, is connect the dots. We trade only clear setup with a reasonably good risk to reward ratio and expected positive value. Otherwise, there's no point of getting into the trade, because the moment you click the trade button, you are already in risk and you are already losing money because of the spread. Okay. So of course we need to know when we click the trade button and why. We avoid, of course, low time frame intraday trades, because everybody should know the lower the time frame you trade, the more room for error and mistakes, because at the end of the day, within a yearly period, the lower the time frame goes, the more amount of candles you have. So of course it makes sense the higher the risk and room for error. So that's how it works. We provide trade management recommendations within the cycle that we trade. So of course the numbers need to provide us with an edge in order to trade a specific instrument. We never recommend anything out of randomness, and of course we emphasize a lot in diversification. What this means is that we like to diversify our trades. We do not only, let's say, trade on forex. We trade on commodities, on metals, crypto sometimes as well these days. Sometimes we will trade on indices and so on and so forth. So sometimes we avoid certain, let's say, asset classes because we do not really find a proper edge or something with good positive expected value. So in that case, there will be times that we will not trade forex, sometimes we will not trade indices, and so on and so forth. So this is very important. If you want to be an efficient trader, you need to understand you have a lot of options available for trading, and never stuck to a few pairs. The people that will tell you they have their best pairs or anything like that, this is a pure gimmick. It doesn't exist, because these pairs at some times they will get in bad market conditions, and this is how you start losing money. So, and at the end, it's important of understanding of timing and market rotation periods. And of course, we need, as you know, to respect time, because the market is not moving in a straight line. And sometimes it takes some time for the move to start to develop. So this is where traders need to be patient when they enter trades and let the market play out, and then get on the right track and timing, right? So overall, this is what we wanted to present today, guys. Another important and valuable educational video based on what we provide in our service and what makes us unique from the rest. In the next few educational videos, we'll try to provide some more numerical examples, like for instance, most traders, we know that they don't know how to calculate their lot sizes, let's say their stop losses with the pip value, and so on and so forth. So this is what we will try to do from the next week onwards for the next educational videos. And of course, you know, every weekend we upload our weekly market forecast, the free version, here on YouTube. We will try to switch from Sunday to Saturday, ideally, for this one. And on Wednesdays, we have this type of videos that provide to you guys with value and education. If you like the video, give us a thumbs up. Consider to subscribe. Turn on your notifications so you never miss an update or a new video from us. And of course, if you are interested in becoming a better trader, you can join us with the link in the description through BMC, our membership page. Feel free to leave us a comment or send us a private email at support@roiforecast.com in case you have any questions. We will be happy to answer to you within the day. So with that note, enjoy the rest of your week, and we'll see you in the next video.